Welcome to the Infinite Wealth Podcast. I'm Cameron Christensen, along with our co-host Anthony Faso. We just interviewed Sarah Sullivan with SuGo Capital, and what she does is she connects investors with passive income opportunities via real estate. Great conversation, Anthony. What was the takeaway you had?
Well, what I liked is we got real basic of really we're talking about syndications, right? Which they're all over the place now. So we wanted to get Sarah in there to kind of explain what are they, right? Who are they for, and who are they not? And I think she did a great job explaining that. And I learned a few things. One of them, again, due diligence and working with the people is super important. And I didn't know that there's a website that have already done some of that for you, where they've done some of the personal background checks on the people, and also are verifying their track record or prior experiences. So I thought that was very cool. Cam, what was some of your takeaways?
Yeah, my takeaway that I really liked with Sarah is that, words are important, and I like the way that she defined a general partner versus a limited partner. The words that she used was a general partner is the active member. That's somebody that's going to be managing the syndication. And then the limited partner is that passive investor. And then she went into kind of who that passive investor role is good for and who it isn't for. So great overview by Sarah.
Yeah.
Awesome. Also, right, is Sarah is putting on what you discussed in this interview is she's putting on a Confident Investor series or event later this month. And lo and behold, we're actually going to be speaking. Right? But not only we speaking, there's actually 39 other people that are speaking at this event. And there's going to be 39 people speaking over a 2-week period. And so if you guys are looking for some really good investment opportunities or some more information on any of that stuff, is make sure you click on the link below.
Yeah, and with Sarah, we wanted her to speak on syndications at a high level today, but we want some more meat, right? Some more information. So what we're going to do is we're going to bring her back for a live webinar. And then this way she can share her screen, dive a little deeper in the information. And my favorite part would be the ability for you to ask questions. And we've scheduled that is going to be on Thursday, May 5th at 12 o'clock Pacific time. We will have a link in the show notes to sign up, but that will be a great opportunity to learn more about syndications.
Yeah.
In addition to this great episode you're about to listen to.
A lot of information.
Enjoy the episode.
Take care. Sarah, we are excited to have you back. And today what we're going to do is we're going to be diving into syndications, and you are going to be giving us an overview of who's it for, who's it not for, with some additional details. But first, you have been working really hard and diligent on creating a great event that's going to be happening later this month. The Confident Investor. If you wouldn't mind maybe taking a minute or so and kind of give us an idea of what this event is and how you even got started with it.
Yeah, thanks. And I'm glad you guys are going to be speaking at the event. You're going to really make it a great one. So the confidentinvestorsummit.com, it's always up there. I do it several times per year, and it was born out of, so I'm a real estate investor. People who invest alongside me are real estate investors, but there's so many other things people need to know. There's money mindset work, there's tax implications, there's whole life insurance, there's whole portfolio diversification, there's asset protection, legacy planning. These are all things that investors need to think about, not just oh, how much am I going to put in this one investment, but a long-term strategy. And so when I was working with my investors, I was getting these questions piled up. And so I started having these events where I bring in people who are actually the expert in all these different areas in the ecosystem of wealth building. And we put on a great show. We answer questions, we give our best tips that we give all of our clients, and it's free. theconfidentinvestorsummit.com. We'll see you guys there if you want to come.
I'm excited not only because we're speaking, right? But this is over 40 speakers over 10 days, right?
Yep, it's 2 weeks long, but it's not all day, just 3 hours a day. So, it's consumable.
Yeah, no, I've seen the lineup, and it's great. And I like the fact that you're saving the best for last. Right? So
are you guys at the end of the lineup?
We are.
I thought that was your intention, Sarah. But
actually, you you allowed us to choose, so we are on the Thursday, and
Okay.
right, that would give us some time to get some information out to our listeners. And so if you guys want to register, there's going to be a link in the show notes for the Confident Investor event that's later this month. But
what's the time frames?
It's 9 to noon PST, March 21st until March 31st. And if you miss anything, it's all going to be recorded and the replays will be sent out. If you register, the agenda is going to be sent out because maybe you don't care about half the speakers. You want to make sure you hit on certain speakers. You'll get the agenda. It'll be recorded. It's a lot of good stuff.
Yeah.
Okay.
I'm
awesome.
excited.
Perfect.
Awesome.
Yeah.
Today,
Thanks.
right, Sarah, we really wanted to bring you back is because we get the questions about certain types of investments a lot. And syndications seem to be kind of a hot topic lately. And we know that you are the expert in that. And so that's why we brought you back. So we've got some questions prepared for you. But if you've got a novice investor that comes to you and says, hey, what is a syndication? Could you start there and give us kind of an overview?
Yeah, definitely. So a syndication, whether it's real estate or something else, is basically where people pool their money together in order to acquire something. And so in my case, we're apartment syndicators, meaning we pool a bunch of investors' money together in order to purchase a large apartment building. And so we might purchase something that's $20 or $30 million. That's a big down payment. And so maybe 40, 50, 60 different investors will put their money in to cover that down payment cost. And then we put that apartment building in an LLC, and the investors are members of that LLC. So in a nutshell, they own the asset, but indirectly. So they're not on the loan, they're not on the deed, but they get the benefits of owning real estate as far as cash flow, appreciation, and tax benefits.
You mentioned something there that I've got on there. What's the difference? You talked about some of the structure. What's the difference between kind of a general partner and a limited partner?
Oh, great question. Yes. So the general partners call the shots. They're basically the active members. So they make the decisions. So they're managing the project, the property, the portfolio, whatever it is that's owned by that LLC. So me and my partners, we're the general partners, referred to as the GP. So we'll make the call as to what capital improvements to do, what property management company to hire, what rent to charge. We do all the back end business, bookkeeping, etc. And we decide when to sell and negotiate the sale on behalf of the investors. The investors will be the LP members, the limited partners of the LLC, and they do absolutely nothing besides make sure that their ACH information is correct in our portal so they get the checks. Well, so they get the deposits.
Awesome. So we got passive, right? And then we got some passive investors and then some active members. On the passive investor piece, who is this good for and who's it not good for?
It's a great question. So it's great for people who want to be totally hands off. So if you really like being involved in all the decisions around investing and around real estate, like if that is just really fun for you, then it probably wouldn't be great for you. Because you get the financial reports and stuff like that, but you're not involved in any of the decision making. If that's your cup of tea, you could do a joint venture, a JV partnership with someone who would like your input. So it's really great for people who are oftentimes entrepreneurs or W-2 earners who enjoy their day job. They excel running a business or something else, but they want to put their money into real estate and have the benefits of real estate without doing any of the work. So it's really great for people who want to be hands off. It's also great for people who have a certain amount of capital to invest. So oftentimes when people ask me, hey, should I invest in a syndication or another type of real estate investment? Well, if you have $5,000 to invest, there are other types of real estate investing, like wholesaling, fix and flip. You should probably, buy a course and figure out what is a really active way that you can actually earn equity in real estate with sweat equity. Because $5,000 in a syndication, even if it doubles your money over 2 years, that's still, you're going to need more money than that in your savings. So syndications are often best for people who have enough net worth, or they're growing their net worth in tandem to being part of the syndication, who can earn money somewhere else faster than they could actively in real estate. So like a fix and flip, you might earn 40K, but if you're a real estate agent and you can make 100K in a month doing sales, you should do that instead. Invest passively in syndications.
So you see the number you use is 5,000. Is there a typical number that most of your syndications are looking for, minimums, anything like that there?
Yes, our syndications are usually a minimum of 100,000 because they're quite large. Like I mentioned, like $20-30 million is our purchase price right now. But there are lots of crowdfunding websites where they have, it's set up like a marketplace, and they have the same structure as we do. And because the same entity structure, but because they're a marketplace and they have a whole company backing these marketplaces, they can take investments. I've seen stuff out there where it's like a $10,000 minimum investment or $25,000 minimum investment. They're out there.
What about, you mentioned 2 years. What about somebody's expected timeline and maybe their expected return over that time frame?
Yes, that's another good question. So syndications come in all different shapes and sizes. So you can have a syndication for a new build, like, someone's building a hotel and it's going to be done in 18 months. So you won't get any cash flow, but you'll get appreciation on the back end if they took land and turned it into a hotel. That would be a short time frame. Some syndications are someone who buys a 100-unit apartment building and they hold it for 20 years, and you earn dividends in the form of, a portion of the rent. So a syndication is simply a group of people participating, but the asset that's held in that LLC can be pretty much any form of real estate, and you can find one with pretty much any time frame. So it's a really good point that investors should know what their time frame is and make sure that what they're looking for matches that. People ask me all the time, is this a good investment? And to your point, I say it depends on what your investment goals are. If you really need cash flow because you're living on fixed income, then something that cash flows for long term might be better for you. If you're earlier in your years and you just, really want to ramp up that net worth, maybe looking for something that has no cash flow, but higher projected appreciation on the back end with shorter term holds is going to be better for your goals.
No, Sarah, typically with the ones that at least you're putting together, I know they're pretty broad. What's kind of the average hold time?
For ours, our business plans are usually 3 to 5 years.
Okay. And then during the 3 to 5 years, is there cash flow?
Yes, there is.
Okay.
And everyone's a little different. Does it start right away? Does it start after 6 to 9 months? But they all do have cash flow that's paid quarterly. Usually we do a 70-30 split, meaning that the investors collectively get 70% of the cash flow from the rent, from renters, and then the general partners keep 30%. And there's also something called a preferred return, which is basically a floor. It's not guaranteed, but it means investors will be paid this amount before the management team gets any money. So if the preferred amount is 8%, it means investors will get an 8% return on their money before the management team sees any returns. So it's not a guarantee, but it's your best guarantee in an investment that we're going to work our hardest to make sure it exceeds the preferred return, so we're not working for free. It aligns our interests.
Perfect. Now, so I know these hold times might be a little bit different, but what happens if life happens and you need that capital back before the time frame?
Yeah, that's a good question. It should be considered an illiquid investment, meaning do not invest in something that, I always give this example. If your child is going to college in 5 years and this is the lump sum that you're going to pay for their college with, don't put it in something that says a 4-year hold period, because it could be 3 years, it could be 5 years. It's an estimate. but you don't want to not be able to send them to college because your investment's locked up. Now, there are extenuating circumstances where we can get attorneys involved and, sell shares and stuff like that, but not within the first 18 months of ownership.
Okay. Now,
Yeah.
do you see people using their IRAs to fund these syndications?
Oh, yes. About 50% of the funds used to purchase our apartment buildings come from IRAs or 401ks.
Okay,
Yep. So like if
awesome.
a raise is $12 million that we're raising, probably about 6 million is coming from IRAs or 401ks. So we have a bunch of IRA companies that we work with on this.
So I've heard in regards to syndications, a bunch of different asset classes, or maybe just different ones, right? There's, you've mentioned a few of them already: apartments, self-storage units. How would an investor, somebody, navigate kind of which one to look at? Is it more important kind of that piece to it, or the management team?
Yeah, that's a tricky question. Being a passive investor, I always say do due diligence on the management team first, because they're going to choose the good investments if they're experienced, right? Especially in that asset class. The problem that you could run into, though, is that it could be someone who has a lot of experience in commercial real estate, but it's a bad time to buy commercial real estate. So hopefully they would shift and they would start syndicating a different asset class. But if they didn't, they could still have really a great track record in commercial real estate, and it's just not a great time in the market for it. And for passive investors, it's a little bit trickier to start learning the market cycles of a bunch of different asset classes.
Mm-hmm.
So it's a good point, because this is something that it does take more time. And that's why I'm in multifamily and apartments, because even though it goes in cycles, if you're in the mid-range class B apartments, it's pretty much always a pretty good time. Now, right now we're in a seller's market. So we're selling a bunch of stuff, but we're still able to find good stuff. So it's just, you really got to watch it. You really got to watch it and listen to people out there who are in the different asset classes and know what the risks are, and when we're at a point in the economy where those risks are stronger or less strong.
That piece on due diligence, I know I've heard you talk about that quite a bit.
Yes.
And I'd love to bring you back for maybe a live video on something like that. Would you be open to it?
Oh yeah, definitely. I probably once a month I speak on that to my own audience, and I have SEC attorneys come in and talk about how to do due diligence, how to really read the PPM, how to read a track record, which is, you think, hey, a track record's a track record, but it's not. The importance of, there's a website, it's called Veravest. You can find SuGo Capital, my company, on Veravest. SuGo Capital, if you just put it in the search bar when you're in there. And so this is a website where they will do due diligence for you. So they did a background check on me and the principals in my company. They're in the process right now of verifying my track record. So at the time of this recording, my track record's not on there, but it's because they're verifying it. And so I learned about this from another fund manager, and I was like, that is fantastic. Because yep, they did a full background check and audit, and then I get a little badge I can put in my email signature that says I'm I'm, at least I've not been charged with fraud yet.
Well, that's good.
Yes.
Now, one thing we've talked about having you, because when we were preparing for what we're going to talk about today, and I know you, Sarah, you have so many things you want to talk about, and you can get into some more detail. What we decided is we'd have this one to be more at a high level, meaning just something that even Cameron can understand. Okay. And then what we're going to do is do a live webinar. And
so fun. Yes.
This way you can share your screen, kind of take questions. We can kind of maybe look at some numbers or some samples, and you give people a chance to meet you on a more in-depth level. And then with that class or that webinar, we will be putting that into our online course as well. So that way, if people want to learn more about the syndications, we're going to be a spot for them.
Yeah, that's awesome. And I think the part about due diligence, what's great about it is that it can be applied to almost any investment. So when I talk about due diligence, I always say do due diligence on the people first. So I talk about how to do that. Second, on the market. And so no matter what kind of real estate investment you're doing, you're going to want to do market research the same way that I talk about doing market research for apartment buildings. It would be the same for Airbnb, for all kinds of different things. So it's really a basic step-by-step that applies to a lot of things. And then lastly, I talk about doing due diligence on the business plan and the actual property and project. So yeah, I'd be happy to do that. It also makes it really accessible to people because they can turn it into a checklist and just like, okay, here's step 1 through 10. And then you can take a look, because there's a lot of syndications out there. So you can take a look at mine, you can take a look at someone else's, and you can apply the same method.
I like that, Sarah. I don't know if I've said this before, but Anthony and I often talk about kind of the difference between saving, investing, and speculating. And investing, right, has got to have that level of due diligence. And I don't think a lot of people are taught that, right? And so to have you kind of put that out there as an avenue or a resource for people, I think is tremendous, because I know I was never exposed to it, right? That's one of the things that I'm going through life and learning so that I can teach my kids, but I never had anybody to teach me kind of how to do due diligence. So great resource. Where can they go to find some of that information?
You know, I just do it live. I don't have it out there recorded anywhere. But
we'll bring you back, like I've alluded to before. We'll bring you back, and right, we'd love to kind of dive into that due diligence piece.
Yeah, and I have a site, sarahs360.com, sarahs360.com. And that's where all my contact information is. So if someone's listening and they're like, I don't want to wait for the live event, I really have this burning question about due diligence, I have it recorded somewhere. So shoot me a line, shoot me a text or email, and I'll have someone dig it up and send it to you, because I have a lot of recordings just not posted. But yeah, it's super useful. And usually people do it in the wrong order. You know, they get a glossy pitch deck and they look at the returns and the numbers first. And I always go to the back, to the management team and the track record, and make sure it matches. Like, do they have experience in this thing that they're trying to do today?
Awesome. I love it. Thanks for sharing, Sarah. Is there anything else that somebody should know about syndications when they're just getting started?
That they are very freeing. And what I mean by that is they're very flexible as far as how you can invest. Like we talked about, you can use your IRAs, your 401ks. You can use pretty much any entity. Your living trust can hold your investments so that, you know, they're easy to pass on to beneficiaries without doing it investment by investment. So it's flexible in that way. It's a great way to hedge against inflation. It's a great way to have some tax benefits, which I'm sure you guys have talked to people about the tax benefits of investing in real estate. And you can do it all while being really hands off. So it's a great way to have all those advantages without having to do any of the work. And believe, you know, a lot of people say if it looks too good to be true, it might not be true. But believe it, there are tons of people out there having just great, phenomenal double-digit returns without doing any work. It's fantastic.
You know, one of our mentors said, if it looks too good to be true, do more research.
There you go. Yep. Do more research. Talk to people. Probably people in your ecosystem have done syndications and have stories of wild success. So, yeah.
Perfect. Sarah, thanks again. We appreciate you being on, and we will put a registration link to the Confident Investor event later this month. And we'll also make sure that we get your sarahs360.com listed in there as well.
Okay. I look forward to having you guys on the event. For all the listeners, I look forward to having you guys on the event, meeting you at some point. Yeah. Thank you very much.
Perfect. Thanks, Sarah. And go make it a fantastic day.
Take care.
All right.